Hello and welcome to the KE Report. I'm your host, Shad Markowitz, and I'm speaking today with Erik Wetterling, also known as the Hedgeless Horseman, runs the hedgelesshorseman.com. We'll put a link to that down below so you can follow along with Erik's work. And Erik, it's always fun having our weekly chats and rants about the resource sector. We've been talking for quite a while off mic, just about a number of different things. But I think one of the topics that keeps coming up is with this low sentiment in the space, the inability of investors that may be positioned at the wrong time or in the wrong companies, although there's not many that are doing great, and they're sitting on paper losses. So maybe they're down 50%, 70%. Heck, there's some companies that are down 90% or more. And so there's some people sitting on some substantial losses on paper, not in reality, because they haven't pulled the trigger yet. But we were talking about the cyclicality of the resource sector. It doesn't matter if it's oil and gas stocks, or lithium stocks or uranium stocks, rare earth stocks, gold and silver stocks. It doesn't matter. Everything moves up in big bursts higher and then has corrective periods that are very boring or sometimes wear people into the ground, only for yet another explosive rally to happen and do it all over again. And it's that cyclicality that people are not used to if they're traditional investors in the general stock market. So maybe just speak to how you're coping with it, how you're talking to investors to wait for the gains, because after the pain comes the gain.
Right. I mean, I think this is one of the most fascinating things really with investing, especially in the commodity sector. I mean, you cannot find a single commodity sector. Look up, the juniors or companies, whatever. It's like, what do they all have in common? They always crash now and then. Like it depends on how big the company is, what sector it is, yada yada. But they always crash, like 50 to 90 minus, somewhere along those lines. What happens every single time? If a company is still around, what happens every single time? Or let's put it like this: what happens to the sector every single time? It rallies like crazy for the next few months or few years. So that is like 100% track record. That after every crash, especially the bigger it is, there's a big fat rally. It has 100% track record. And that's the only reason why Pierre Lassonde says, and he was referring to the gold space, was like the gold mining sector or the gold sector is the easiest sector because it always crashes and always rallies. But for some reason, if you again look at the charts, the runs any commodity sector goes on after a crash is so big that it's like a black swan event. So what can we take from that? That literally at every top and every bottom, mean reversion is like a black swan. So at every top, the market is not pricing in any chance that this sector is going to go down and go into a bear market anytime soon, and then it starts doing that. And at every bottom, it's pricing in very, very, very low chance of there being some kind of rally anytime soon. I mean, it's really ridiculous because if at face value one just looks at this commodity space and everybody's heard the idea, buy low, sell high. Well, there isn't really any sector that goes higher and lower than the commodity space. So it's like, when you think about it, it's like, how do we even lose in this sector if we have a 5 to 10 year time frame at least? Because sure, I mean, every cycle can be like, 3-4 years. I mean, this is a long bear market, for example, but it's like 5-10 years. There's no way one shouldn't have been able to buy very low, and there's almost no way it's not going to rally afterwards. Well, there is no chance it's not going to rally afterwards. It always does.
Well, Erik, I can imagine people listening to this and rolling their eyes or groaning at their desks and thinking, I've been patient, I've waited. It's been a situation where the mining stocks have kept going down while AI is taking off and cryptos are taking off and all these other sectors are lighting fire. So there's this opportunity cost of being in the sector. And I wish I never would have got in it. And as soon as I get back to zero, I'm out of the sector. What would you say to people like that? Because there is some legitimate pain. There are people sitting on, again, these paper losses. Is the right strategy just to sell as soon as they get back to zero?
Well, I don't think so. And I mean, for better or for worse, my first entry into the mining space was in 2015, and I probably told this story a bunch of times. I thought I was buying low when I bought late 2015, buying cheap. Well, my portfolio went down 54% in the first 4 months. That is, I mean, if people are down 50, 60% over the last 3 years, that's not even close to being down 54% in 4 months, not from a compounding perspective. okay. So, I mean, in hindsight, it looks like, oh, I mean, easy to buy. I mean, it was low. Anybody can see it in hindsight. At the time, it didn't feel too good. But I was just focused on one thing. Everyone said it was cheap. I know what this sector can do because it fell from somewhere, right? It fell from the 2011 high. And if you look what happened before the 2011 high, you can go back and see, oh, it bottomed in 2000, went on an 11-year bull run, then crashed. And again, go and look at any single commodity space. Go look at the Barron Gold Mining Index. No crash lasts forever, and there's not a single crash that is not followed by a major rally. So it's like the expectations right now, because it's so dead, you can have one guy selling your favorite junior and it's down 10 to 20%. One guy. Joe Schmo in, I don't know, Alabama or whatever. And it's like, it's hard even for one person to accumulate these shares right now. So it's like, I don't think people have any idea what can happen when a sector is totally bombed out. Because, okay, I think a majority of, let's say, the followers I have added over the last 3 years, they bought in at the 2020 highs. So most people have not even seen a full cycle. Most people have never even bought low once and seen what happens afterwards. It's easier if you have been buying low since 2015 and have seen, let's say, multiple rallies to the tune of several 100%. I know it can happen because I've seen it happen a bunch of times. And some would argue that it's still been only bear market rallies. And I know we've talked about this. There's like, you have the Rosbeidis, you have Rick Rules, etc. They're looking at this and saying this is like, going back to the early 2000s, because that was the end of a major decade-long perhaps bear market, and what followed was a 11-year bull run. So I think people's expectations are so low right now that it feels like 100% rally is almost a miracle. But still, we're seeing some signs now that some of these juniors, I mean, they're popping 30-40% on very low volumes. So imagine if it's like two people buying some of these stocks up 30% in a day or 2 days. Imagine when it's 20 people or 200 people or 2,000 people. So it's like, I think it's going to be bigger actually than people think, because it shows it's just getting more and more of a big black swan.
Well, Erik, we'll keep following along for whenever the bottom does come, but I think it's fun sometimes just to look at the psychology around investing in the resource stocks and the cyclicality around it to help people that may be feeling pretty lousy about the decisions that they've made, but not realizing that after the storm comes the calm. After the darkness comes the light. So there is a cyclicality to this business. When it will shift, nobody knows, but God, I hope it shifts soon for everybody's sake that's listening. But let's also talk about a jurisdiction that's kind of coming into its own right in time to catch this sector, and that's really the mining stocks in Sweden. We've talked about a couple of them before this call and decided just to dedicate this episode to some of the Swedish companies right in your backyard. And the first one that we'll talk about is Goldline Resources, traded on the TSXV under the ticker GLDL. They've just recently announced finishing up the merger with Barsele, combining that land position with Goldline. What has you attracted to this story in Sweden focused on gold?
Yeah, so the Goldline shares, they're in a trading halt right now because the deal with Barsele has gone through, so they're going to be converted to Barsele shares. I mean, I wrote up, I think it was Goldline or Barsele some time ago, and it's like I just pointed out that, hey, in my green case scenario or a blue case scenario, these two companies would merge, because then you would have the most significant gold asset in Sweden, located in the Goldline belt, which belonged to Barsele and partnered with Agnico. And Goldline would bring around 100 kilometers of strike within the Goldline belt. And I mean, 100 kilometers of strike in a belt like that's enough almost for 10 juniors. I mean, depending on what jurisdiction we're in. Was like, this is a tier 1 jurisdiction, obviously. It's Sweden, very rich history of mining, largest mining hub in Europe, and Europe needs a lot of metals going forward because we don't have too many mines. So it's like, now that's complete. So you have more, that's what I like the picture of, you have a margin of safety. They will own 45% of the Barsele deposit and have 100 kilometers of strike. And then they also Goldline will bring in a a gold resource in Finland and some other projects around Sweden. So what I hope is going to happen is that somehow they're going to make a deal like old Barsele tried to make with Agnico a few years back, where Goldline will become operator, so they can control the news flow from that property, because I think there's more gold there. And in that case, I think it could get really fun when we get into a gold bull, because then you would have better news flow. You would have margin of safety being, again, it's like a multi-million ounce gold deposit in Sweden, and Sweden has some of the lowest cost mines in the world, and 100 kilometers of exploration potential. So you get that, let's say, hybrid play where you're buying gold in the ground, so you have beta from that, and you have 100 kilometers of a gold belt to explore in a tier 1 jurisdiction, which may or may not become a bubble if, Thomas Kaplan is correct that in the future the world is going to be so chaotic that, let's say, the better jurisdictions will get a premium. So it's like, do I know any of that will happen? No. I just think it's, in my opinion, it's a good bet. And I mean, since it's in Sweden, it's just very, very cool for me personally. I own a lot of shares, and Barsele, I think they're still a sponsor, so twice biased.
Well, let's also talk about two other companies, and I guess we could kind of talk about them separately or together. I'll just throw them out to you. And that is, in Sweden, there's also some big news about how the government could be changing its tune on uranium extraction in the country. They've already started changing their tune as far as how they're looking at nuclear energy, and that's led into a discussion, well, then why don't we get our own domestic supply of uranium? There are huge uranium reserves in Sweden, and there are two companies really working on the uranium story in Sweden: District Metals under the ticker DMX on the TSXV, and Mawson Gold under the ticker MAW on the TSXV. Actually, when I first started looking at Mawson Gold almost over a decade ago, they were a uranium company before they were a gold company. Well, now that uranium in Sweden is coming back alive again, so are the interest in these two companies' properties in Sweden. What do you make of that environment going on with the uranium interest in Sweden, Erik?
I think this goes to show, first of all, we got a right-leaning government a while back. And it's like the funny thing is the moratorium was put on uranium in 2018. So I mean, after 2018, there was no point in even touching anything, any sort of polymetallic deposit, or especially not a pure uranium deposit in Sweden, because it's like you can't do anything with it anyway. But now it's like lately there's almost I was going to say bombardment of like news about nuclear energy and the need for uranium, etc. So I mean, it really feels like, the powers that be, let's say, they're massaging people to like, okay, showing the need for uranium, how much nuclear is needed, and especially given the winter we had in Sweden, I think it was 2 winters ago, when the electricity prices went sky high. And now we're obviously in Sweden, we're talking about, building more nuclear reactors and stuff like that. And I've also recently in Swedish business media seen articles about mining and mining stocks. And it's like, that's very surprising given the piss poor sentiment, in it globally. And in Sweden, it's not really a big thing. But to me, it looks like Sweden is, I don't know, intentionally, let's say, putting out some reports and media articles, whatever, to again warm up the population. That's like, hey, get excited about mining. We're gonna need mining. And in District's example, they just staked even more ground around their alum shale deposits in Sweden. So they now have huge projects, including the largest undeveloped uranium deposit on Earth. So it's like, that's what I like with this play, for example, and Mawson. It's like, it's more of an optionality play in the sense that, yes, have we already seen the, let's say, bottom in uranium? Yeah, that might have been, I don't know, 2 years ago or something like that. And I'm not, too up to date when it comes to uranium, but it's like, well, I just look at, some of the market caps, and the way I see it is like, hey, I think there's a pretty good likelihood they're going to lift the moratorium. And in that case, I think these assets are going to be worth something in the eyes of the market, because it's like the largest undeveloped. uranium deposits. Like it doesn't get more beta than that. And District has like a 30 million market cap. Plus they have all the base metal projects and the deal with Boliden. So I like that from a risk reward perspective for several different reasons. And the interesting thing with Mawson Gold is that they have a lot of shares. They own around 51% of Southern Cross in Australia, which have made a gold discovery. And I think they're trading at over a 200 million market cap or something, if you account for all the shares out there. And that's pretty impressive. So obviously they're on to something in the eyes of the market. And I just started, putting together a quick spreadsheet and see, okay, what is the shareholdings worth in Southern Cross, because they're planning to distribute them to the shareholders of Mawson Gold. So it's like, I don't know exactly where it's trading at today, but I started buying some shares again. I owned Mawson before, like a few weeks ago, because it was literally trading in Canada. Mawson was trading for less than their shareholding in Southern Cross was worth, and they also have staked, pretty much according to them, every single conventional uranium deposit or prospect in Sweden. Plus they have a gold project in Sweden as well. So again, it's like, I don't know what to think about uranium per se, but it's like, if I can get that optionality for free, I mean, worst case scenario at face value, I get my money back already in Southern Cross. And then I get a free optionality on all the conventional uranium deposits in Sweden, plus their gold project, and they have like 5-6 million in cash. So it was simply trading at a discount to their Southern Cross holdings for a while. So it's like, hey, I mean, it's not like anything is guaranteed, but is that a cheap bet? Yeah, I think so.
Yeah, it's an interesting point on both companies, Erik, because with District Metals, they have all of the lead and zinc and silver and polymetallic deposits with Boliden and other 100% owned projects, in addition to the uranium thesis. And even their uranium project is polymetallic and has a lot of other metals in the mix. And with Mawson, you're getting the Southern Cross gold exposure, that 51%, but you're also getting the gold project in Sweden and the uranium project as a kicker for less than what the shares in the Southern Cross are even worth in their underlying market cap. So both of them have upside kickers compared to not just the uranium, but all the other metals and projects they have exposure to. So definitely something to keep an eye on in Sweden. And with all three companies, with the Barsele Gold Line merger, with District Metals and with Mawson, it just shows that Sweden is back on the map again as far as a jurisdiction that's getting more serious about mineral extraction. So appreciate you highlighting that in your own backyard, Erik. If people like getting Erik's thoughts, definitely check him out over at Twitter. Check him out at ceo.ca, or check him out over at his website, thehedgelesshorseman.com. As always, Erik, looking forward to our next conversation.
The same. Also, I own shares of all three companies, and District and Barsele are sponsors. So consider me twice biased and do your own due diligence.